Our house in the middle of our street, our house. Well, boys and girls, it's Saturday morning. Got my coffee, because we all know Scruffy likes a coffee. So let's have a chat.
Matron, take them away.
And a warm welcome to one and all. And if this is your first time here, I'm this vocal talent that is Scruff. And I'm trying to put trading in the real world. Now, on a Saturday morning, I like to just get my coffee, ponder my thoughts, switch the camera on, and just go with it. Because one of the things you'll find on this channel, whether you're seeing me trading, doing a sort of educational live stream, or this, it's never scripted. It's always in the moment, off we go, which is most important for the trading part. I don't use rollback charts. Everything is in the moment. It's always a live trade. So with that said, what's happening this week? Well, there's lots of things happening this week. It's the 1st of April today. I could go down the route of being the clown and do the April Fool's Day, but I'm not today. Because today's subject is quite important. Do you deserve to trade? And I think that's where I've come to the answer from a sort of Q&A that we had yesterday with the Scruffy Squad. Now, I'm going to touch on that after I've shown you a couple of figures, because it's the end of the month, so I'll show you where I'm up to and tell you what I'm going to be doing for the coming year. Because for those of you overseas who don't know, the UK tax year is April to April, so I do my financial tax year April to April. So I'll be cleaning off all my journals and I'll be starting from scratch. And I'm pleased to say I hit every single goal. In fact, if I flick this over, I'll show you something. That's the share account. It didn't do as well as I thought it might, simply because if you have been watching the news, you saw that the banks took a major pounding in March, just out of the blue. Boom, there was a little bit of unsettlement, and wallop, down they came. And I had Lloyds and Barclays, and it took a big chunk out of the account. But I finished on 23% for the year. Now, considering I started that in December with just pennies, I'm quite pleased with the growth. So we're going to be starting this again. I'm going to run it through continuous, and it's starting with a bigger balance. And that's where we go with trading. As long as you're stepping forward, that's all you want, you know. So tell me a bank that would have given me 23% in 3 months. There isn't one. And tell me a bank that would generate this in 3 months, because I started using this in January. So this is only 3 months worth of data. And I did my year's salary from January. And if we just flick the calendar on it, because I'm going to update this today, there's January. And if you remember, I was on holiday for most of it and I was ill, so I did quite well. February and March. I think I've done all right this year. So I'm going to clean that off to zero. I'm going to have nothing left on it. I'm going to start that again from scratch. And I need a pay rise. The way I normally work my wages is I look for a benchmark of X amount. Now, last year was 30,000. Now, I did that in 3 months, as you've just seen. Right, let me explain why I do that, because some people do pull me up on my salary. I get paid very well. All right, I make no bones of that. I get paid very well, but it's a job. So you treat it as a job, you are paid as a job. But like most jobs, you have a basic salary and you have bonus salary, on target earnings, if you like. I base everything, and I have done this my entire life, off the basic salary. So when I worked in industry and I worked for a medical company, I got paid a lot of sort of bonuses and commissions, etc., on top of a basic salary. But I worked out my lifestyle on the basic salary. And then it meant if I got a bonus, that's exactly what it was. It could be used to buy something nice, whether it's a holiday or sort of a new toy or whatever it was. I do the same principle with my trading. I have a basic salary, and the way I work that out is I don't like to trade Monday. I don't particularly like to trade Friday. So that gives me 3 days of my wage trading. I want 30,000 a year. I want a holiday, and I want some time off. So that's about 4 weeks. So we'll take 4 weeks out of the year, leaves you 48 weeks. So if you have 48 weeks and you take that down into sort of divide 30,000 by 48, gives you about 600 quid. Divide that 600 quid by 3, because that's the amount of days that I work, gives me 200 quid a day. It's how I work things out. I break it down to the smallest part. And then when you see me trade, if I'm over 200 quid, brilliant, I stop because I know my salary's secure. Now, if I've got runners and they sort of have colossal days where I'll do 500 or 600 quid, amazing. But as long as I get my 2, I'm happy. Now, with the cost of living and various things and winky wants, and we've just sort of completed on purchasing another house, because that's another thing I'll be doing. I'll sort of take you an update of what boom and bust really is. Because if you have seen some of the stories, Joanne and I lost the lot 6 years ago. Our factory went bust and we were left with the debts, and well, it wiped us out. And it's taken us 6 years to get back to where we are now. And where are we at now? Well, we're debt free, and we've just bought that house outright for cash using trading, because that's our sole income. It's where we get our money from. Nobody helps us, and I'll touch on that in the lifestyle video. So my wage for the year coming forward, I do need a pay rise. I also need to sort of renovate the wreck that we've bought, because trust me, don't get excited. It ain't good. It ain't a nice house. It's in a lovely area, but it's absolutely smashed to pieces. It's a right wreck. So it's going to be interesting doing that up, giving me something to do. So I'll be looking for about 40 grand this year. Give myself about 10 grand pay rise. That'll do. So that'll be 280, 300 quid a day, which will suit me down to the ground, because it's not pushing the boat out too far from where I'm going, where I actually earn already, but it's realistic. And that's what I want to get to, because in the conversation we had there's a couple of guys, and I'm going to give them a salute. It's Steve and Simon, and in the sort of face-to-face chat, and if you don't know what they are, each day we have like a Zoom meeting with the group, and we'll talk about the issues of the day and trading, etc. You know, set ourselves up for the day. And one of the guys said, "Oh well, I've had a red day, but I was ready for it. I would deserved a red day because I've done so well." And I thought that was an odd comment to say, but then it was kind of echoed by another one of the guys, and I've given this a lot of thought. I really have, because it kind of caught me off the hoof. And we're trying to get to the bottom of the rabbit hole in the call. He's financially sound, does very well with challenges, so he can pass a challenge easy enough. But when the challenge moves up, it then kind of falls apart a little bit. And he gets fearful of the position or the money or whatever. And we started going down and said, well, is it the money? And we figured out that it's not the money, because he's worth a bob or two. So you can kind of afford to lose it. And then we're going right the way around the houses. And to cut a long story short, I actually think the issue is something that's called Imposter Syndrome. Now, that leads me back to sort of my salary and everything that I've just been showing you. And let me explain it. Imposter syndrome in trading is kind of quite a strange concept, but it is definitely there. And it's one of those problems that's as bad if not worse than the fear and greed. Now, fear and greed is quite easy to recognize. You know, greed, well, it's obvious. You start putting your position sizes on too big because you want the money. And then you find that the day that the market decides I ain't playing your game, it's going to take it all off you. Now, you can be flying really high, and I mean really high, and I've seen it. And I spoke to professional traders who've seen it as well, where you're winning. So you're putting your position up, and you're winning, and you're putting your position up. And you think, this is it. I am king of the universe. Nobody can beat me. But trust me, you can't beat the market indefinitely. There's going to be a day it's going to clout you. And that day is the day you put the position on too big and you let it run. And it'll just take everything off you. So you can have a massive account, but the market will still eat it in a heartbeat. Right? So greed is a real issue. Now, fear is actually the other way around. That's where you're seeing the money and you're frightened of losing it. So you snatch it. So you're not allowing the trade to have its full potential. But what you do is you let the loser have over potential. In other words, you let the loser run because you're fearful of giving the money away. So they are two different concepts, but they're very easy to recognize. But imposter syndrome is not so much, because that's where you feel you don't deserve it. But why? You know, you have this big win and you think, oh, I'm so lucky. Well, you shouldn't be lucky. I've just shown you my stats for the last 3 months. You know, they are consistently good throughout the months, but added together, they make a lot of money. But if I said to you, could you make 30 grand in 3 months? You go, oh, I'd be so lucky to have that. Well, why are you lucky? It's your job. If you're being lucky, you should be getting a bloody lottery ticket. And this is what imposter syndrome is. It's actually you don't feel you deserve the fruits of your labor, shall we say, you know, because luck has nothing to do with trading. Well, it has a little bit to do with trading, but if you're going to be consistent, it has nothing to do with it. Luck is what you make for yourself, and that's where I'm going with this. So I can't put it in the comments. Do answer this question. Do you actually feel you deserve to trade? And by that, I mean, you're consistent, you're earning good money, you might be earning better money than your job. Do you think you deserve it? Because a lot of people don't. They think it's luck. And because they don't believe that they deserve it, and they think it's luck, they think the luck's going to run out. Now that breeds the fear. And then you combine all of this together, and that's where your trading starts falling apart. So I think the imposter syndrome might be the answer here. So that is something that I'm going to bring up when we have our next meeting, to see if that's exactly where it is, because I'm kind of complexed by the situation. If you're doing well, why are you doing well? Are you doing it through skill, or are you doing it through luck? Now, if it's through skill, then you do deserve the big bucks. You know, but the big bucks deserve an account that can take it. Now, they're all connected, and what I mean by that is very simple. If you're putting on £10 a position, or £20 a position, or 2 lots if you're a lot trader, you need an account that can easily absorb the blows that that'll give you. If you're on 2 lots and you're on something like under 20 grand, you're probably tempting fate, and you're pushing the outer limits of that account. You know, now this is one of the issues that prop traders have, and I see this regular as well. And funny enough, I was speaking with the 5%ers yesterday, and this was brought up. People want to trade the big positions. They want to trade huge positions, but they don't actually understand the margin requirement behind it. Now, when you are trading prop, and I still do, you know, and in fairness, I mean, prop has done me very well. First year I did it, I saved every penny that I was paid from the prop firm, and then I liquidated an account. In other words, took all the profit out and just let it run. And I bought a Range Rover with it. So they bought me a Range Rover. Now, over the last sort of 18 months, Joanne wanted a new house, or should I rephrase that? Wanted another house because we started to build up our sort of portfolios again. I've saved every penny that they've got, and sort of in December I liquidated all the accounts, and it pulled us forward to the fact that we could buy the house outright with no mortgage, no lending, and that's what props gave me. But if Alex said, well, I'm trading multiple hundreds of thousands, which I do, that money's not mine. It belongs to a prop fund, but it's also a Fugadi money. It doesn't exist, you know, and that's going to complex. You go, what do you mean it doesn't exist? It's because it's just margin. It's buying power. You can have the bragging rights and say, right, I've got a sort of £600,000 prop fund. Yeah, you do. But you haven't got £600,000. What you've got is £600,000 worth of buying power that has a bit of leverage in it. The account is the drawdown. So if you've got 100,000 and you're on a 6% drawdown, well, you've actually only got 6,000. So that's where the confusion becomes, because you think you have this massive account, therefore you're managing a massive fund. You're not. My personal fund was far greater than the prop funds. Absolutely. And it was probably twice the size if I added it up, you know. So my personal fund, which is what I look after the most, far outweighed the prop. Far outweighed. And my personal fund far outweighed the wages. Now that'll sort of throw you up. Well, how does that work? It's because of the amount of money that I have. In my personal fund, it's mine. It's physical money. So if I say I've got £120,000 in there, I have £120,000 in there. If I say I've got 120,000 in a prop fund, I don't. I've maybe got about £6,000 or £7,000. So the buying power for the position, not opening a position, for the position, are completely different, because you need to size it on the size of the drawdown. I think I've explained that badly. I'll tell you how I do it anyway. I work roughly on 10p for every 100 or £1 a thousand. So if I've got a drawdown of 6,000, the biggest position size I can have is £6 or 0.6 of a lot. Okay, I would need £10,000 worth of drawdown in order to have a one lot position. If I wanted two lots, I need 20,000 of drawdown to get that two lots. If you're got less than that, you're on the outer extreme of the account, and you're just setting yourself up for a fall, and it's fool's gold, because you can be hitting money, and think you're king of the tree. But I'm telling you straight, you outstretch that account will come back like a rubber band, and it's going to smack you as hard as a rubber band would be, sitting in your teeth and pulling it. I genuinely mean that. So, going off on a tangent here, aren't I? So that's my thoughts. So just in sort of recap about that, work on £1 for every 1,000 or 10p for every 100. That'll sort your position size out. Okay, and it keeps it in check. And then take your trade as you would. Now, if you are doing it that way, then it's your skill, and you do deserve the money the trade will give you. If you're just putting it in like that, then no, it's just luck and you happen to be doing okay. So answer me this: are you an imposter? Are you fearful? Are you greedy? Or a bit of all of it? I've been through it. I've done the fear, I've done the greed. Imposter syndrome I've never really experienced, because I've always dealt with big numbers. When I was in industry, I dealt with big numbers there. When I had my factory, that was big numbers. So the big numbers didn't worry me. I wasn't sort of thinking, oh, I'm so lucky to have this. I was just used to it. And if you are feeling that way, a good thing to do is actually switch your P&L off. You know what your position size is, because I've just told you how to work it out. Put your position size on, break it up if that's how you want to do it. So you break it up to a stop, or you put your stop in, and then you put your target in where you think it's going to go. Switch the P&L off and actually walk away. Come back an hour later, because you can have time segments that you trade. So you might think, well, I'm trading an hourly candle. I trade hourly candles. I might enter on a 5-minute, but I'm actually trading an hourly candle. And once I've entered, I'll come back at the end of the hour. And it'll either be at target, close to target, or close to stop, whatever. Make a decision. Am I going to adjust anything? Right, okay, I'm happy. Walk away for another hour. This will make life a lot simpler for you. Anyway, cherish your thoughts. It's just me, the rambles on a Saturday, just trying to give you some experience. So in the comments, if you drop down your questions, there is going to be Ask Scruff. It's every other Sunday. Next one's on 2nd of April, tomorrow. And I'll try and bring it up if you can't make it, or come along and join us. And you can talk to me real time. If you're interested in any of the journals that I've just shown, the spreadsheet is my own. The other one is Trader Sync. You'll find a link for that down in the description. You can use it for free, and there's a discount at the end of it. And if you're interested in the Scruffy Squad, links for that as well. So as always, guys, trade well, keep your risk managed, but above all, do what you love, and the money will follow. See you all in the next one.